All right, welcome back, everybody. I hope you guys are all doing well. I hope you guys are digesting a lot of the content we've been making and going through, really taking notes, getting things dialed in. And I hope you guys have been watching in the Telegram because we've been doing some very fun things in there. A lot of cool, insightful mornings so far, and there's many more ahead. So if you guys are not in there, make sure you guys hop in. You guys can see there's links all through my Twitter and then as well, or my X, and then as well on my YouTube. But we're going to get right into it. We're going to try and keep these short just because I don't love the long 60-minute editing videos and all that jazz. So we're going to get right into it. So I had given you guys the first presentation scalping model I use. And this is in terms of the hierarchy of trades, right? So it'll look like this. And I know we had talked about this, but it's going to be, I'm just going to write FP, which is just first presentation, to minute 15, which is internal range liquidity, meaning uh minute 15 internal range for me is something like a fair value gap, right? So any FEG, um sell side balance, buy side balance, right? This is first. This is what will always come first, regardless if it's going to run previous day's high or low, London's high or low, previous week's high or low, right? I'm always looking for these levels to get ran into first. These are the ones they're going to spring and jump off of, right? It's like if it will go here, it has to stop here first. It has to at least try this first. That's the idea behind it. Next one is going to be first presentation, and we are going to take it into London highs and lows. Okay, so this would come next, right? So obviously, if we have London highs and lows in place, uh, that would mean that we are inside the current daily's range so far between, when we opened the previous day up until now. So however you'd like to look at that, it really wouldn't matter because the London session forms after, but I just start at midnight for my quote unquote day. That's what ICT's always said, use midnight as your power three delineation. That's the opening price. So I'm using that now to basically say the London session will form highs and lows right after that time period. So this is going to be a checkpoint before I would look for previous day's high and low, right? There's going to be days where there might not be a run on London's high or low, but there would be on but there is a run on the previous day's high or low, right? And the whole idea behind this is, well, if you're ever in a day where you have previous days, say it's previous days low marked up, and you're like, I'm pretty sure this is the draw. On the weekly we have targets below us, so it makes sense that this is the draw. We're going to take out previous days low and continue lower. You want to trade first presentation to previous days low. Well, if the London session made a low in that area, you have to watch that because if you're trading from first presentation and it drops into the London's higher low, there's a good chance you're going to see a reaction there. Days where it's very heavy, price could just slice through it and just keep running and accelerate to get out of there. Other times you'll see it take London's higher low. It'll reverse on you. It'll come back. And these are all just things I found in my own studies, but it'll come back on you. Maybe you retest first presentation or go wipe out the current liquidity that formed after 9:30. So that's that initial range little lesson I did where it's, following the points right after 9:30 to see, all right, what is it really following? Because in all honesty, and I could show you guys in a little bit on a 1 minute chart, it engineers itself the ability to grow larger ranges and faster and quicker. Okay, you guys are going to see that. That was actually this morning. It was doing that on a 1 minute chart. We'll watch after 7 a.m. towards the end of this, but back to this. So first presentation, London higher low always has to come first, right? And then it would be first presentation into previous day's high or low. And then lastly, it would be first presentation into previous week's high and low. And I really wouldn't take it any further than that. And even this previous week's high or low, it's not like I'm always assuming that. I would really only trade that if we're approaching it. So maybe like Monday made a low, Tuesday ran the low. Um, and it traded all the way back up and now we're going back towards previous week's high area. Maybe I would use it on Wednesday to take it into previous week's high, like if that's a potential, maybe a possible low of the week's in. ICT has always said prior to Wednesday, you'd expect a low of the week to form in a London session. So um, that's pretty much what we're working with and building the narrative behind how we're going to use these. So this is the hierarchy, if you will. Think of it like a pyramid. These would be at the bottom. These are your, I don't want to say easiest, but these are always going to be first up. It should go in this order when it crosses through these things. And like I said, there will be times where some of these are not there. Meaning you might not have, like I said, a London session, but you have a previous day's low. In other words, maybe it was just a one shot, from midnight, it just slowly trickled or stayed in a consolidation. You don't have a clear London high or low. You'll see these things. They should stand off the chart to you. So pretty quickly, I just want to show this is that idea I was just saying. Initial range liquidity after 7 a.m. You start tracking price, and this is also done for me after 9:30. It's like a little restart into an even bigger range. But notice how it makes a high, makes a low, it comes back for the high, and then it quickly goes back down for the low, and it just stretched itself, right? So this initial range now just, gave itself an extra like half of that lower. Okay. Um, Now think about price came back up, failed to take the high, took the low out, and then it was very fast to go back up there. So you could see how it just constantly engineered itself. This was its new point of reference. And then this was the new low we had. And once we took, like, this was all noise in between. But once you take one of these sides, it's extremely fast away, right? That's kind of that initial range liquidity idea where it's just using itself to grow and develop a bigger range. And then, like I said, 9:30 comes and now it uses this to make an even bigger range. Okay. But we are going to get back into first presentation. I'm going to show you guys today's setup now. All right. So today was Tuesday. It's the 11th of March, 2025. I had started off by going on a minute 15 chart, and I'm going to put a line right at 9:30. So you are going to look. So this was just for me to mark where 7 a.m. was. That's kind of when I start looking around in the morning. Look prior to this red line here. Okay. So pretend this side of the chart here doesn't exist yet, right? When it was over here, where is the open inefficiencies right here at 9:15? Okay. I see one right in here. This one got covered. There's none in here. There's none here, right? These all got filled in. The next one was right here. So I'd give you guys this level today because this is our initial range, or this is our internal range liquidity, right? It's this low to pretty much this high is what we were working with at the time. You see that? How this is the current range we're inside of. So it's that, think about that initial range liquidity, what I just shared. It's using itself to grow here just on a much larger scale, right? But this is the current range you're working inside of. So in between is noise. There's a lot of noise. We use that noise and we navigate through it by using first presentation and targeting things like these gaps and little inefficiencies. So I'll take this off and we're going to share the trade I took today. Just going to quickly mark these over. You guys could check the Telegram. I'm just going to save some time. The levels are more exact. These are just going to be more so visuals. So I'm going to drop into a minute one, but just know these at this point in time, right? It looks like this. This is what I'm looking at. And I said here or here, we have to see what 9:30 does when it opens. It'll most likely spring to one and then go back towards the other or wipe all the way through it, take liquidity. We're going to find out. So we're on a minute one now. And I'm not going to bar replay this just because I had already taken the setup, taken the trade. You guys could go see all the executions and all that afterwards, but I'd rather just kind of talk it out than bar replay and take the time to do that. So first presentation comes after 9:30, minute one chart. It cannot be the 9:30 candle because as we are instructed, 9:29 doesn't quote unquote exist, right? In terms of when it begins at 9:30. So you could see here, this is 9:25. We have nothing in here. Here's 9:30. we have nothing, nothing, nothing. And then here we have our first mark. When I view this, I'm viewing it because, in my opinion, it's kind of just been shown to us and told there's great reactions off here. You guys go do your own studying, which I actually like. I like that approach because it does make people have to do their own research to find out. But you have to kind of say what is this I'm looking at? So when I look at this, I'm saying I believe this is like a power of three, quote unquote fair value price to be either a participant in the morning session or for the New York session in general. So I look at it like if this is the first gap, it's a fair price to be a buyer or a seller at. So in other words, it opens up here, it's trading here. There's a nice push off of it. This is the first opportunity for us to go long and have a reference. Say you used it, it comes back out, maybe stops your break even, you bump your stop up, when you're trailing, or, there was no opportunity to trade into here because it got tagged before this gap was created. So this was out of the picture. So I told you guys this was taken. It's no longer, you know, um, useful for us, if you will, I guess. So what I'm watching and what I was watching this morning was, okay, now we have to study a run into 19339.25 because that's all we have left to work with. And I'm only doing that if price gets below. I was not saying in here it was going to go here. I was saying if it breaks down below it, I will begin watching to see if it gives me opportunity in order flow to get down to there. Okay, because this would be the likely place that it goes to. So this model is all about just quick little fluctuations, quick little sprints from one level right into these. These are like the most obvious, okay? And then over time, you'll advance into that little hierarchy I showed you of London session highs and lows, previous days highs and lows, and using it like that. And understanding going into this, you know what you're looking for, but just these offer so much potential and opportunity. So when price had broken back down, like I said, I did not know price was going to do this, okay? I I want to make that very vocal because I could do something, but it's because I've studied it and I've seen it enough times to understand what I want to see. For the average person, I would never want anyone to think I know exactly what is going to happen. But I'm telling you, from what I've studied and what I do, this is the things I see repeating over and over again. So as long as we position ourselves, use proper risk to reward, and don't, over leverage and get dumb with it, it could potentially, work out in your favor. There's obviously no guarantees with anything, but this is how I use it. So when it broke back down, I was saying to you guys, okay, and you guys could go back and look at the Telegram. It's all timestamped. I was saying we want to see this 50% level start coming into action, if you will. So we broke down through. Right away, I'm watching now. I'm saying, do we have any return into this lower half? If we jump up and close over the top, I simply wait. It has to come back down now and close back below it. And I'll start watching order flow. So what I did was it closed above. I was waiting. This candle wicked. So now I'm watching. I'm saying, okay, if we have a third candle that closes down, I'll look for an immediate rebalance right in here. We didn't get that. We got the opposite. It closed outside. Okay, now I'm waiting. It has to now come back down and close again. It comes back down through. It closes here. I'm watching. Okay. Do we start getting you know, sensitive around the 50%, comes back up, you know, books in the high. Everything's closing right around, if you were to grade this one more time, and I could quickly highlight it, that's right around however you look at it, top 25 or 75%, it's closing right in on. So you can tell it's respecting it and it's showing you it in there. And then price dives lower, right? So now I was watching right over here because now price closed outside. I was saying I want to start getting positioned. It just so happens when I was going to enter off here, it pushed my entry in. On a 15-second, I am going to use bar replay just because I don't want to lose my spot and have to scroll back. But you'll see my entry in here. It came and you could go back in the Telegram and look. I had taken a short position right, I believe it was this candle. Or this candle, my bad. I'd taken a short right there and my stop loss had sat right at the time, it was 50%. And I really didn't I just didn't want to leave it all the way up to the high. I kind of wanted to see something a little more specific at the time. I want to see this candle, these two be used as order blocks. And when I saw this one close lower, I was like, all right, we're good. And then it obviously came back and wicked me right before it dropped. So I had repositioned myself now when we closed right here off the immediate rebalance right in here. So this candle I went short on. Stop loss sat right here. And it just, you could tell it just melted away from the rest. Now, I want you to study all the order flow in this. So any bullish candle we look at should shoot price down lower. Bullish candle right there, boom. That could have been an entry as well. New bullish, new bullish candle. We want to see these keep pushing price down. And this is how clean it should look every time. Fair value gap. This is our order flow, right? This is how we're viewing things. And each of these could have been little entries, right? If this is your style of trading, I would rather be positioned one time and be using this stuff to kind of like gauge my stop loss, right? So this is how I'm doing it. And, we'll make it purple, but we'll just say this is my stop loss, right? So as this stuff's happening and I'm positioned up here, I see it breaking down, boom, my stop loss moves to here because I only want to see it now touching the bottom and lower half of this. And then as we're getting gaps in here, my stop loss is getting bumped. And this is how we're slowly pulling this down. Now, often you'll see it to break even, like it would have sat there for a while. And then when I start getting down here, getting new bullish candles, then I'll start pushing it because we're over halfway to the target anyways. So at that point, it's like I want to see a one-way shot. When I study price, it's not this, right? It's this from here to there, one pass. Okay. And this is the stuff I look for, that repeat right down to the level. And like I said, I'll leave it up to you guys to go look inside the Telegram and you guys will see my execution off of this candle. And then I actually had closed, I believe it was right in here because that little loss in there. And when I was trailing it down, I shaved one off and then I just closed the second shortly after because I was content with the day. I didn't really love um I in my opinion, I didn't really love this deep dive and then kind of lay over the top. So I was a little in my opinion, it was concerning if we were going to reject off of this opening down close candle right down here. And then I didn't want to see it run all the way back up. I was, more so getting out of my session. I'm not going to keep trading past, 10:30, 11 o'clock if it keeps coming back up. That would be considered like a different model or a different idea, right? Using first presentation. So I hope you guys found some insightful stuff here. I hope you guys are studying on your own and you guys are actually seeing how this stuff does repeat a lot and how it's constantly using itself to engineer. And then on top of that, it's using, I guess we could just call them landmarkers as first presentation to navigate from that level down to these ones. And like I said, these are just the easier ones, but like I said, that's exactly what we want to see. And then, you'll graduate over time, and even myself, I'm still developing in it. Being able to hold for the whole thing and trust that, and I think this would come over time too, when you're a little more financially stable in trading, right? You're seeing numbers you're visually pleased with seeing and not visually pleased, but in terms of, your life bills and life costs to trading, it's working out in your favor, giving you extra, then you'll be more lenient to leave stop loss at break even with, a couple runners on and just say, if it goes, it goes. If it doesn't, it could come all the way back. But in the beginning, I definitely recommend people to be trailing their stop down using this order flow. Because like I said, I study just this. I don't study these retracements back in here. So that's why it's easy for me to get in and drop a stop loss above a candle, like I did over in here, right? I expected it to start over here and it just wicked me out one more time before it began. I want to show you guys first presentation on the Dow Jones really quick. This was also from today. I thought this was really cool and worth a share. First presentation, and I think this is furthermore just evidence, and I know ICT's been talking a lot lately about it, but um, this clearly just shows that this is not random stuff because Why would a news event at 10 a.m. open as hectic as it got, stop dead in its tracks at 50% of that first presentation fair value gap, and then melt off and give you the best entry? Outside of, if you just sent it when it was opening up at 9:30, it gave you the best entry for the day on shorts. So I thought that was cool. I'm not saying that I took this or would have ever taken this, but it's things like this that when I see them, it should give you a lot of confidence that, these are controlled and it'll, well, I guess you'll see repeating things. We'll leave it like that. So that being said, guys, I hope you guys learned something. If you guys like this video and you guys like this information, always feel free, at your own cost to leave a like and subscribe. Make sure you guys are following my Telegram. Same thing on X. And we will be out pretty shortly. And like I said, we're gonna do the rest of this week, and then I believe over the weekend I'll drop our next first presentation model, which will be trading into the London session high or low. So that being said, guys, enjoy your guys' night. If you guys have any questions, always feel free to leave a message right in the comment section, or you could head over to X and leave it there.